Good day, traders. Richard Jacobs here, and welcome to this week's edition of the Underdog Weekly Perspectives Report, where we reflect on the trading week that's passed and also form some views on what we think the market's going to be doing in the days and potentially the weeks ahead. Now, to kick off, I just want to apologize for the lack of video release last week. We had some technology problems. In fact, I did record the entire video and then realized as we were going into the editing phase that no audio was actually being recorded. But we've resolved those issues and looking forward to this week's report. But just to stick with last week for a bit, we had quite a good week in the Underdog live trading room where we managed to close out on a trade that we flagged, I think, in our perspectives report a few weeks back, as well as to our daily subscribers. And this week, just to mix things up a bit, I thought what we could do is go back to a cut of that weekly perspectives report. I think it was the 24th of April report, if you want to jump back to the full video, which is up on YouTube. But I'm just going to cut back to a clip of that because it gives us a nice primer for how we went about constructing our trading opportunity. And then what we can do is we can jump sort of forward in time to where we are now and just watch how things actually played out. Volatility levels. The thing I do want to highlight again, and it's something that we pointed out in last week's report, is this potential bigger target that we are eyeballing. I'm just going to clean this chart up a bit. Let's clean that up. And you remember we all along we've been looking at this this initial impulse breakout here, which happened into the beginning of the year, and then we had this complex retracement in the top 40 all the way down, forming this falling channel, this falling price channel here. We had that breakout in the middle of March, and quite a textbook fashion, we had the breakout, a pullback into the breakout level, and then the market continued to the upside. Now, if we just look at it technically, the projected target for this breakout over here, one could use this initial impulse leg here and take it to the more or less where the breakout level is. Let's call it around about there. And you can see that that comes in around about that 48,000 level on the market right there. And the other thing that we did highlight was if we did see this retracement happening over here, which we are seeing at the moment, we regarded it as quite a healthy bullish retracement. And we could take our Fibonacci projection tool on this leg of the move, and we spoke about a 127 projection. So let's just put that in, 127 projection, and as you can see, it lines up fairly nicely around about that 48,000 level. So what we have here is this is what we call confluence. You know, you've got this this bit of a harmonic pattern in terms of this leg matching this leg and the projected breakout level pushing up into the same zone as a 127 projection of this continuation leg of the move. So really what we would be looking for, and we regard the overall trend as still being bullish in this market, what we would be looking for is some kind of a reversal over here and a continuation move pushing up into that 120 into that 127 Fibonacci projection level, into that 48,000 level as an initial target. And with the stochastic now being oversold, the potential for positive divergence, I think this is probably a good area where one could consider trying to structure some kind of a trading opportunity to get involved to the upside. Okay, and so fast forwarding 2 weeks, where do we find ourselves? Well, the markets just on Friday tapped in at that 48,000 level that we had flagged. It took quite a while to get there, and you had to exercise some good patience, but it took about 4 trading weeks, the better part of 4 trading weeks to move all the way up there. And as you can see, this is where we entered the trade on this continuation move over here, and simply rode the market to the upside. We had a few mini consolidations, I would call it, happening over there, and then again in the week that was past. But really, the market didn't put in any significant retracement before moving up into that level. It was just a question of being disciplined, maintaining the patience, and waiting for us to hit our targets. So all in all, a good trade for us. It was something like 1,900 points of profit, or 2.7 to 1 reward to risk that we did achieve there. And the reason I highlighted that trade was not simply to blow our own trumpet in terms of saying, we scored a nice big profitable trade in the market. It was really to re-emphasize or reinforce the learnings from that trade setup. And those were, when you construct a setup, it's really about building a story, and you're taking elements, tools, pieces from your toolbox, putting them together to construct a high probability trade. And in this case, it was a combination of us looking at this this pattern structure here, the breakout of that pattern, where the projected levels were. We looked at price structure making higher highs and higher lows. We looked at Fibonacci levels to gauge where the market could potentially be retracing to, and where we envisage price moving to from a projection perspective. We used our stochastic as a guide to when the market was overbought and oversold, and we also looked at previous price structure levels, just to add additional confirmation. And really, when you're constructing a high probability trade, those are the elements some of the elements that you need to start putting together. And the more you can add to the story or to the case for a particular trade, the higher the probability of that trade being successful. So having reflected on that particular trade, let's look at what could potentially happen in the next few days and the weeks ahead. So from a structure perspective, we've obviously pushed up into that 127 level. And what I want to first do is, and that 48,000 level, what I first want to do is zoom out a bit and look at some previous price structures. Well, a couple of things. If you look back at that 127 level, you actually see that it lines up pretty well with this previous price structure level right here. And then what's also evident is that the next level right there comes in at around about that 48,500 level. And if you want to zoom out a bit more, you could also see that we've got a 161.8 projection, which is coming in around about that previous level over there. So we do have, just keep it at that level, we do have some potential further upside targets in play over here. The next logical level from a price structure perspective would come in at around about 48,500. The market's pretty much at that 48,000 level now, so we're talking about another 500 points to the upside. And if it were to push through there, we could then start looking at that around about that 49,000 level, lining up with this previous price structure, which is going back to November 2015. And those, I think, if I stand to be corrected, yeah, those are really the all-time highs of the top 40. And that level lines up with the 161.8 projection. Now, importantly, we're not saying the market will move up into those levels, but from a structure perspective, those would be good targets to keep on the radar for where the market could potentially move to. Also, you got to bear in mind that even though this market has pushed pretty hard, it can go up further. I always say an overbought market can stay overbought for a long period of time. And we had in the past week, we had some very interesting stochastic activity. In that, we had this rollover over here. Well, that was the week before. The market then pushed upside in a failed stochastic move, went overbought again, broke to the downside and we expected some consolidation to play out. Market pulled back, put in a really shallow retracement here. Look at these tails on these candles. That was indicative of buyers, coming into the market. And then we had another stochastic crossover with a stochastic crossing above its signal line and pushing up. Where we stand now, just from a pure structure perspective and looking at the stochastic isn't overbought as yet. It's looking to push into overbought territory. It'll probably do so in the next trading session, which will be Monday. But just from a pure price structure perspective, we've got these bullish looking candles, quite solid green. Market closing in the last 2 days at least, closing near its intraday highs. So structurally, one could expect further upside to materialize. And if that were to be the case, then we would be eyeballing this 48,500 level, and then even if that were to break or were to be achieved, even the 49,000 level as potential targets. And there's nothing to suggest, despite everything that's been happening, and I know there's been a bit of an uptick in volatility on the international markets with all the political shenanigans as coming through from the US. But really, all that's happening in our top 40 is that the market continues to make higher highs, higher lows. And while that's happening, it's actually important to respect the message that the market is giving us. The incentive is always for us to try and pick tops. Speaking to a bunch of different traders, people saw this happening, the market pushing up here. At this point, it pushed up here. It didn't make it made a higher high, but it didn't make a higher close. In other words, we didn't have a close above this previous high level, and we had this overbought stochastic market started to roll down. So you had traders that decided to short the market over there. That is a counter trend trade. The market is still making higher highs and higher lows. There's no, you can short the market there, most definitely, but you have to bear in mind that that is going against the prevailing trend in the market, and you need to be wary in case the market does push to the upside again, which it did clearly. Pushed up again there, and again we had a similar situation right there. The stochastic went overbought, market looked to be pushing down, traders went short again, and look what happened. They would, unless they were out of their positions very quickly, the market did a very shallow retracement and pushed to the upside again. So the lesson really is, if you're going to be a counter trend trader, there's absolutely nothing wrong with that, but you just need to be aware of your risk levels, be able to move very quickly in a market which could move against you, very quickly. So from my perspective, I much prefer trading with a trend, and trading with a trend in this market has really been about pushing, if you are on end of day basis at least, pushing for these long positions as far as possible. So, from a structure perspective, that's what we're seeing at the moment. We're seeing a bullish trend in place, a bullish market, and still further potential upside going into the start of the week. You're looking at and we like to look at this. It's just a horrendous picture. It's the normalized average through range of our market. And, this is another area where you think it can't go any lower, and it simply does. The volatility just continues to push to the downside. And if you look at this, this is an indicator, just by the way, is a normalized ATR, and it's I think it's a 21 day. Let's just have a look. Yeah, it's a 21 day average of the normalized average through range. And that's what we use as a proxy for volatility in our market. And it hit a low at the end of last week. And if we go back, let's just see where we're going back to. Look at that. We're going all the way back to, where's this? Round about September 2014 was the last time we had this low, a normalized ATR in our local market. So again, despite what's happening on the international front and the potential uptick, we are still in very, or not uptick, sorry, the uptick in volatility. We are still in very low volatility times. And what's also important to bear in mind is the seasonal patterns that tend to come online at this time of the year. We're coming towards the end of May, we're getting into June, July. This is our winter period, but international summer holidays, traditionally volatility drops off during that period. So we find ourselves in a position where we already at super low volatility levels, and we're now getting into a seasonal period where volatility levels are traditionally low. So in the absence of some kind of massive catalyst, be it from the international side, the Trumps of the world get impeached, be it on the local side in terms of what happens in our own local politics, in the absence of any major event of some kind, we'd actually expect these low volatility levels to prevail for the next few months, and then potentially post-winter, or going into the tail end of winter, July, August, start to see volatility tick to the upside again. So that's it from a structural and volatility perspective. As we always do, let's just switch over and have a look around some of the other markets and their potential impact on our top 40. Starting off as always with the USD's Rand exchange rate. Again, on the weekly basis, we haven't seen much change since the week of the 3rd of April. We've just been operating in a fairly static range on the weekly, at least, with the market in a strengthening strengthening trend, making lower lows and lower highs. Daily's been quite a bit more interesting, as the market put in this deep retracement at the beginning of April, then put in a strengthening continuation to the downside into the end of April, but failed to push down to these lows over here. And I don't think many of us were expecting it to actually get to those levels again. Then it threatened to push to the upside again, and it weakened, and then we got a strengthening trend playing out again into the middle of last week. And at the moment we sort of floating around about this 1323, 1325 level, and it's really a question of where to from here. We've got two areas or zones that we're going to focus on. If the market were to break beyond this 1365 on a daily basis, then we would expect further weakness in the Rand, and that will obviously support our top 40 equity market. And conversely, if the market were to push down here and close below call it the 13 Rand even handle, then we would expect further strengthening of the currency, and that will have a negative impact on our local market. So in relative terms, relative to what's been happening over the past few weeks, this is actually quite a narrow range, 13 to 1365. And so the USD Rand exchange rate is going to be a critical thing to monitor over the week and the weeks ahead, to see which way it pushes and what impact that has on our local market. In this space, politically, it's probably a case of South African politics playing off against US politics, with US politics obviously having the greater influence on the currency pair. So watch this space quite carefully. If we look over at the US equity market, let's just load that up. Again, weekly looks as it always has since the US elections, bullish and pushing to the upside. On the daily, it looks a bit more interesting. I mean, we had the market push up to the upside, make a high here at the beginning of March, put in a retracement, continue to the upside, putting in a higher close. and now it's starting to retrace again. It didn't really push up that hard on this continuation leg beyond where the previous swing high over here. And this is where we had, the international or the Trump shenanigans starting to play out and impact on the U.S. market as well. So what we're seeing at the moment is we are seeing another retracement playing out. And what's going to be key is that this 2330, call it the 2330 on the S&P actually holds. If you get a daily break and close below that level, that would be the first daily break and close since going back to September 2016, so pre-US elections. So that's quite a key level for the S&P. And if we do see a break and close below there, we can reasonably expect further downside. At the moment, it's sitting at about 2383, and if it should push beyond 2400 again, then we can expect further upside to play out. So between the USD, Rand pair, and the S&P, those are the two critical markets that we need to monitor in the week ahead. But as it stands, it remains in a bullish trend. Gold as our indicator of risk on, risk off. Weekly, we've still got gold looking quite bullish. On the daily as well, I mean, gold broke to the upside, put in quite a deep retracement, but then continued to the upside. So at the moment, as long as gold doesn't break below this 1220 level, it remains in a bullish trend, and that's potentially indicative of some risk of sitting in the market. So gold is not painting the most bullish of pictures for our local top 40. And then the final market we always have a look at is oil. And oil's weekly unchanged. We're in a deep retracement at the moment. On the daily, it's been interesting. We had this massive push down here and this break to the downside at the beginning of May. Daily break and close below this $50 level. But then the market started putting in a retracement virtually from the, after a push down and break, it then started to retrace almost immediately after that. Now, the question really is this break a false breakout to the downside over here? And in which case, we can, in a sense, disregard this candle over here and look for the market to push up further. At the moment, it's looking quite bullish on a shorter term basis, closing on Friday at its highs. So oil's looking quite bullish. So if we start putting all of these things together, I mean, you've got the, as I said, from the USD Rand perspective, you've still got this strengthening trend in place. The S&P is in a bullish condition, but it is retracing. You've got the oil pushing to the upside, but the gold is also pushing to the upside, indicative of potential risk of coming into the market. So we've got some contradiction between those factors and what's happening from a structural perspective here on the top 40. So where that leaves us is, from a structural perspective, we would still favor further upside, but we don't anticipate that further upside is going to happen at a rapid pace. We're not going to see, if you look at this leg of the move here, we're not going to see this massive pushes to the upside happening over here. Instead, we're anticipating a more gradual upside starting to play out in the week ahead. And depending on what happens specifically with the USD Rand and the S&P, we may start to see some kind of a retracement playing out, perhaps to the tail end of the week. So it's difficult at this stage to call the market in terms of where it's going to go. What I would say is that one needs to be very wary of just going out and buying this market. I don't think it's going to be a straightforward push to the upside. I do think we may have some more of this kind of mess here, especially on an intraday basis where you're seeing some consolidation happening. And if the S&P were to roll to the downside, if the rand were to break below that 13 rand to the dollar level, we will certainly start to see some deeper retracement playing out. So that's it from a perspectives report. It's not the greatest looking outlook, but we certainly still favor the upside to a certain extent. Guys, that's it from our side. I hope this video was useful in your as you use it in your trading. And as always, if you did enjoy it, just drop me a like on just below this video, or drop me a line at richard@underdoginvestments.co.za, and I'll be happy to engage with you on any other analysis needs that you have in terms of our local market. In the week ahead, have a fruitful trading week. Be safe in your trading, exercise good discipline, exercise good risk management, and I wish you all of the best, and we shall chat next week. Cheers.